Well, first of all, you named it already. I think we had a quite good start in the first quarter. We could deliver on the expectation of the capital market, but the overall sentiment at the moment, there is uncertainty in the stock market about industrial goods and especially about truck. It's all about the demand in the second half and how it continues in 2024. And that's our assumption why the stock price is under pressure. The results were specifically strong in Q1. We do not expect that that's the reason for the reduced stock price.
Now, in your press release this morning, you have talked about demand to carry on outpacing supply throughout the second half of the year. Should we read that as supply chain issues having fully not normalized yet?
Yeah, that's true. We have seen a quite good development in the first quarter as far as supply is concerned. That was also one of the reasons why we were able to increase our volumes significantly compared to prior year. However, we expect that for the remainder of the year, we still see problems in supply chain. One is that we see more and more cyber attacks on the supply side. The other one is, over the last 2 years, basically we robbed the whole pipeline to safeguard production volume. And to rebuild this pipeline, that will be the challenge for the remainder of the years. Therefore, we expect another year where demand is stronger than supply.
When will you reach the turning point whereby you're able to meet the demand that's out there?
Well, there are two elements to that. The one element is at the moment there's a lot of pent-up demand in the market. That means in the year 2020, volume was low. In 2021, in 2022, and most likely in 2023, we will be not able to fill full demand. But in 2024, it might be in a balance. So the pent-up demand will be reduced in the months to come. And on the other hand, we are working, and the whole industry is working, in further stabilizing the supply chain and working to remove the bottlenecks the industry have at the moment. So probably 2024 is the point where demand and supply is first time in balance again.
Okay, very clear. Thank you for breaking it down like that. Very helpful. I know investors are very keen on tracking the profitability improvement at Mercedes. Can you give us a sense of what you've seen this latest quarter and what's on the horizon for the remainder of 2023?
Yeah, well, we are very pleased with the development on the Mercedes segment in the first quarter. And that's especially the case if you think about Brazil, which is a major market for Mercedes, is very much down after the implementation of the Euro 6 regulation at beginning of January this year. So a weak market in Brazil, a strong market in Europe, strong demand for our products. We were able to increase our prices last year, and we see now the full impact. We have an increased share of service revenue. That means on parts, on maintenance, there is demand for our products as well. And we continuously work on our cost base and optimize our spending profile towards more heavy-duty business, which is the highest margin business in our industry. These are the ingredients which made the Q1 a success. And we will continue on that in the remainder of the year. As we discussed earlier, we expect demand to be strong, pricing rather stable, raw materials, which is a big cost burden or was a big cost burden in the last 2 years, more on a stable level towards the second half of the year, and recover inflationary pressure with additional prices. That's the way we think about the rest of the year. And with that, we expect a further good development on the Mercedes-Benz segment.